Hello, and welcome to a Saturday edition of Real Day Trading. So excited about what I came up with. I wanted to share it with you, get it out as soon as possible, so maybe you can use it to prep for the weekend. So, as you know, I came up with a method of using algorithm lines to identify price points where if a stock breaks the price point either to the upside or the downside, it's a very powerful signal. And using that, there are all different kinds of setups you can come up with. So what I wanted to do was rank those setups, right? This is the highest probability down to, it's not really low probability, but in that range of all high probability trades, this would be the lower end of that. And if we had that, then you could go through, identify the setups, see which setup had the highest probabilities, and then you can even size accordingly, right? So, double size for the highest probability trade, single or half size for the lower probability trades. Remember, these are all high probability trades. And what I came up with was the highest probability trade. So here on the screen, you have an example of a straightforward algo resistance and support lines, right? Here you have a candle here and an algo line off a high volume candle coming up with several touches, and you could see acting as resistance here. We're actually in this stock, so if Monday it cannot break through this point of resistance, then we'll take our profit. On the lower bound here, another high volume candle. It's above 1 on a relative volume, and up it goes. Okay, so that is a high probability trade. If it broke through the 58, looks like 58.10 mark. But look at this. So here's Apple. Just get out here. Here you have the upper and lower bounds of Apple in its corridor, right? And it's staying right in that corridor. It starts here with a high volume candle. So this is an algo line, many touches, all the way up through here. And you can see it's acting as support. Over here, another one starts and a lot of touches on this line as well, goes all the way up here. Now you extrapolate these lines, right? So it looks like there is a range of like 206 down to like 153, a very wide range there. But if within this bounds, within these ranges, you identify further lines, further algo lines to start with. So if here, right, this is a high volume candle, you connect it to here and here and here, you get a price point of 150.50. That's a lower end. To do the same over here, sorry, wait, and right there, and you connect it all the way up to here and to here. Also, you could start, here, high volume candle, and it just goes down, and you extend it this way. You get a price point right here of 182.70. You can extend these algo lines in both directions, by the way. If you set alerts at 150.50 and 182.70 on Apple, and those alerts are triggered, meaning it broke the downside or it went above 182.70, that is an extraordinarily strong signal. Let's look at how it would have worked with some others. Let's take first MOS. So if we go back in time a bit, let's say December, and let's say you had here, these aren't, by the way, you can't use earning candles to start your algo lines. Here's the upper bound. You can see here, a lot of touches on this line, several, right? Here's the lower. So you would think, okay, we have a lower bound of 37 and an upper bound here of around 49, right? 49.50-ish. If I connect and drew these algo lines, right here's one, drew it up to 49.50, do this one down, 36.94. And set that alert back here at 49.50. So you're looking for a candle that closed the day above that. Well, right here, you go long. Look what happens. Up it goes. Broke through that price point. Take a look at NVIDIA. Okay. Go back in time here. You have your upper bound and lower right here on NVIDIA, starting way back in October. You connect and find, okay, here, going down 264, and then here, the top of this one, going up, connects to that one, and you have 347. So if you put alerts there, and you had an alert on 264, a candle to close below 264. No. Finally, right here. This is the first candle that closes below 264 on January 18th. And you shorted here. Look what happens. Down it goes. If you did it current day, you would now get a lower bound of 206.50 and an upper of 289.50. Set those alerts. Let's take a look at PM. We're in this one, right? Yep. Okay. Here. Here is back in March 2021. Here's your lower bound coming off this candle, non-earnings candle, connect, all the way to this one here, still connects. Here's your upper one, the next high volume candle, right? So over here, several touches. And this here would suggest a 108.94.55. But if you did internal lines within this range here, and you came up with a price point of 106.70 and one of 93.90. Well, first, let's say 93.90. And right here is where it's violated. So you short here. Chops around, down it goes. Now let's say you also still kept your alert at 106.70. That would be this candle here. Go long. So now you've gotten the short, right? But you're keeping your alert at 106.70 here. Now you got your long. You go long right here. Closes this candle. 108 all the way up to 111, $3. Here, 93 all the way down to 85, $8. See how that's working? What this does is it can create for you a upper and lower bound price points on a stock that you set alerts on. Now, if let's say you did this for 100 stocks, right? That would take a while, but you go through your top 100 stocks that you trade and you create the upper bound, you create the lower bound, and then within it, you find the internal algo lines that intersect at an upper and lower price point. And you set your alerts at those price points. And you go all the way through. So you make sure you do different sectors. You would have extraordinarily high probability trades served up to you throughout each week. And if those were the only trades you only took those trades, that would give you an extraordinary edge. It doesn't work for every stock, by the way. You'll find that there are some stocks that you cannot draw those setups, and that's fine. I'll just take a look here. Ones I haven't done. Let's take a look at LCID. There we go. And let me grab up make sure I don't do anything off an earnings date. Right, so there. Okay. So let's look here. Right here, starting here, there's a high volume candle there in April. We'll connect this here like this, and goes right up through there. Okay, and now let's just zoom in on it so it could be easier. Okay. And now here we want to get our lower bound. So stock does not have much volume, does it? No, it does not. Let's see. This is probably the best case here on the lower bound, right? Going all the way through. This is the first one here I could find. Not a very strong lower bound, but like I said, it doesn't work for every stock. So we'll see if we can find one here. Okay. Well, let's just say that is your lower bound there. And now a lot of high volume candles here, right? So let's find a price point on the low end and on the high end. Here we have looking. There's candle here, right up to there, right up to there. Let's see, does that bring down a little bit? Right there, yeah, that does. It still connects. Okay, I'll bring that up to there, like that. Okay. Okay, and that's a price point of 41.60. So let's just put that in at 41.60 there on the high end for this. And now on the low end, a little more difficult. This is the volume again. Here we are. All right, so this one here will not touch down there. This one here. Yep, okay. Yes, right down to there. Now it goes all the way down to 14. Unzoom this. Okay, 41.60. Does that work? If right there, there it is. Candle opens above 41.60. You go long here. You stay in the long. Go all the way up to here. Up to here. You're holding, and then you see this here. You probably set an alert right on the bottom end of the compression. 49.88. That's around $70. It broke through. Breaks through that price point. That's where you would have had your alert right there, right? Try a different one. I'm trying all these, the ones you saw were the ones I had set up. Other than that, I have no idea what some of the other ones are going to look like. But let's give them a try. Let's try one that doesn't move that much, like Kroger. Delete that. Okay. So let's see here. Kroger. Let's make sure we have get the earnings dates over here. So June, September, December, March. Okay. Let's go back in time here. This here was September 10th. So this here was the earnings right there. That's why you see that high volume candle. You want a normal trading candle. This here would be good. There is a really clear and good upward channel here. Perfect for Kroger. And now we want the lower range. And so you need to find one that starts. This is really your first candle. Like it's going to give you any kind of decent lower range here. It's going to go right to there. Bring that back. There is your channel for Kroger, right? Okay. Now within it is there specific price points that we can identify on the low end or on the high end. Sometimes you can't even find them on the low end, and that's fine. If you find them on the high end, then that's the alert that you're going to set, right? So here, I'm going to go through 1, 2 touches right there. And that is right at 49. 60, 49.66, right? So if you had 49.66 as your alert and you had to have the candle, it's going to close above 49.66. So, you're right before closing. It looks like, all right, this is clearly closing above it. Well, right here, it opens way above it, right? And you go long here, it violated that. So let's say you're here at 52, all the way up to 59, and you could still be in that trade. It's consolidated. You just set an alert right here on the bottom end of this consolidation, right at around 54, and that's where you would take profit if it broke through that. You could even be a little bit more aggressive, set it at 56, an alert, right? And if it looks like it's going to close beneath 56, you take profit. Either way, you're in profit on that trade. Let's try, I don't know, IBM. Okay, IBM, very, very choppy as hell. Um, we have we have a line from all the way back here on IBM. Let's get rid of that. So here we had IBM, and it seems like it goes in patches here. There. Very, very choppy stock. Within each patch, these are earnings. So let's take a quick look on IBM. April, July, October, January. So this is the April earnings, I believe. Yep, this was April earnings right here. And you would not really be able to do it on a stock like IBM, I don't believe. But yeah, you could put this here, and then off this candle, you can put it right to there. You can zoom in on that, and then 1, 2, nope, does not work, does not work, and does not work. This one here, right there, that works. Right there, there it is. There's your upper price point for IBM, 146.40. And then here, looking for your lower price point, so we go right down to here, right to there. Okay, and the lower price point on IBM would have been right onto that candle there, bring it down there, okay. And you're looking at 132.78. So you're looking for a candle that closed below 132.78. This is the one here. You short, and you're taking profit anywhere down here, right? It broke through clearly with that gap down, breaks through, starts up here, comes down, breaks through that price point. Setting those price points all throughout every single stock that you normally trade, right? Stocks that you like to trade, don't, you just set those price points throughout them. And it could be, we show, look at PM here, right? We showed this. It could be stocks like this here, right? Breaks through, goes down. But it could be stocks like Geo. And in stocks like Geo, the problem you would have is finding the high volume candles, right? That aren't earnings. So like on Geo here, before we had this drop, you would see probably a price point that is, here is your upper bound on Geo, right through there. And then lower bound, sorry. Here is your, nope. See, there it is there, looking for, there. Well, you also don't want the slope of the line to be too severe, right there, okay? There's your upper bound right there. And then if you found your the candles that have decent volume, like these do, you draw this right down, you would draw this right down to there, and you would get a price point of 814. And if you did the same on the other side, up here, right to there, all the way up, you'd get 947. So if you were going to short under 814, this is the candle you would have shorted on right here. And then look what happened. You short here, down to 705. So there are stocks that are cheaper stocks where it works on. The idea here is if you have two alerts, upper and lower, set on a number of stocks, 50, 100 stocks, and you did those trades, the alert breaks, you wait for the confirmation that it's going to close above or below that price, and then you go long or short. That is going to increase your odds exponentially. Now, of course, within these type of trades, within all of these, what do you call it, algo trades that we're talking about here, there are different types, right? So here's the Kris-Kross here, right? Here's the high volume candle, comes down right to this candle, and then here is this candle here. Now, the notion that, yes, when a algo line is breached or violated, the line itself disappears. That's similar to a trend line. But there are outliers. If there's an occasional outlier, it doesn't negate the line. If the line disappears, the price point that the line may have created, like here's a Kris-Kross price point here, that price point is still valid, even though the lines may have been already at this point crossed. So like this downward sloping line here was already breached to the upside right there. This upward, I'm sorry, this line here, this one here is still intact, acting as resistance. But this price point here in the middle of 95.34 is still valid. Is it as strong as the upper and lower bounds that we just talked about? No. This would go on the lower end of high probability trades, right? So, if you just looked at those three alone, you would be looking at your straight up algo resistance break here. If this broke through, very powerful. The Kris-Kross that I just showed you, less powerful than that, but still a powerful buy or sell signal. And the upper and lower bounds here, right? And this extrapolation no longer matters. This is the point right here. This is the point right here. It is no longer a 200 and 153. It's 182, 150. That is the upper and lower for Apple. Now, yeah, you can play Apple as it chops around, but if you really wanted the highest probability trades, you would just create alert for 182.70 on the upper range, and then create alert for 150.50 on the lower range. It is going to take time to learn how to draw algo lines. It may seem subjective to you. Oh, why did you choose that? Why did you choose that one? I can tell you, Dave Wise, who is best trader I've ever seen, and he works with algo lines constantly. He's been doing them for years, right? When I draw my lines, and then he draws his on the same stock, they match up. We come to the exact same points. That is not a subjective exercise. When two people independent of each other come to the exact same conclusion. So, you get to learn, all right, this is a high volume candle. Why didn't I use this one or this one? Because you're looking for the ones that are going to have the most connections in a clear, straight, linear pattern, right? Over here, this one here, this one here, straight, linear pattern. So here, I'll delete this to show you. Right there, goes right down, and continues on. Pull it back, and there you have your price point, right? There are a number of other candles here, like for example, this one is a high volume candle. This one here, yes, could you go up like that? That is a really sharp slope. You don't want your slopes to be like up here. You want them to be in this range. So it takes time to learn. But when you do, and you figure it out and you practice with it and come up with these price points, I think they are going to be a game changer. Okay. Have fun with it. I will have this in the damn wiki soon, but until then, continue reading the damn wiki and have a great weekend, everyone.